Welcome to this video on term life insurance in 2026, real quotes by age 30, 40 and 50, plus a clear rider's cost breakdown. In the next minutes, you will hear realistic sample pricing, how insurers actually think about risk, what makes premiums move up or down, and how to estimate the true all-in cost once riders are added. This is designed to sound like the shopping experience people have in 2026, with numbers that are plausible for healthy applicants, and with the context you need to compare offers correctly. First, quick reminder of what term life insurance is. Term life is coverage for a set period, commonly 10 years, 20 years, or 30 years. If you die during the term, your beneficiary receives the death benefit, like $250,000, $500,000, or $1 million. If you outlive the term, the policy typically ends with no payout, unless you convert it to permanent coverage or you bought a return of premium design. Term life is usually the most cost-effective way to buy a large amount of coverage for income replacement, mortgage protection, and family security. Now, how should you think about quotes? Term life pricing depends on age, sex, tobacco use, health class, build, labs, family history, driving record, and sometimes occupation and hobbies. It also depends on term length and coverage amount. The quotes you see online are almost always for a specific health class, commonly preferred or preferred plus. The moment you land in standard instead of preferred, premiums can jump materially. So in this video, I will give you 3 sets of numbers for each age: preferred plus, preferred, and standard. All examples assume non-smoker and a typical healthy bill. If you use tobacco, expect premiums to be 2 to 4 times higher depending on carrier and type of tobacco use. One more important note: prices vary by state and by carrier, and underwriting guidelines shift over time. In 2026, many carriers are still using accelerated underwriting for a sizable share of applicants, meaning no exam for some people, with clean data. That can make buying easier, but it does not always make it cheaper. Premiums are still driven by risk, and carriers price differently based on how they expect claims to develop. Let us start with the core of the video: real-world style quotes by age. I will cover common coverage amounts: $250,000, $500,000, and $1 million. I will cover 10-year, 20-year, and 30-year terms. I will give monthly premiums first, because that is what most people pay. Then I will briefly translate that into annual costs so you can compare with other budgets. Age 30 quotes in 2026. These are approximate monthly premiums for a healthy non-smoker. For $500,000 of coverage. 10-year term, preferred plus about 15 to 21 per month. Preferred about 18 to 26 per month, standard about 25 to 38 per month. 20-year term, preferred plus about 22 to 32 per month, preferred about 27 to 40 per month, standard about 58 to 58 per month. 30-year term, preferred plus about 32 to 48 per month, preferred about 40 to 62 per month, standard about 58 to 92 per month. Now, the same age, 30 profile, but $250,000 of coverage. Many carriers price this close to half, but not always exactly half because of policy fees. 10-year term, preferred plus about 9 to 13 per month, preferred about 11 to 16 per month, standard about 15 to 23 per month. 20-year term, preferred plus about 13 to 19 per month, preferred about 16 to 24 per month, standard about 23 to 35 per month. 30-year term, preferred plus about 19 to 28 per month, preferred about 24 to 37 per month, standard about 35 to 55 per month. Now age 30 with $1 million of coverage. In many cases, the premium is close to double the $500,000 premium, but some carriers offer better per dollar pricing at higher face amounts. 10-year term. Preferred Plus about 28 to 40 per month. Preferred about 34 to 50 per month. Standard about 48 to 74 per month. 20-year term. Preferred Plus about 42 to 62 per month. Preferred about 52 to 78 per month. Standard about 74 to 112 per month. 30-year term. Preferred Plus about 62 to 92 per month. Preferred about 78 to 122 per month. Standard about 112 to 178 per month. Pause here and notice the pattern. Age 30 gets you the lowest starting point, and the biggest increase comes when you extend the term from 20 to 30 years, because you are buying coverage deep into later age bands where mortality risk is higher. That is why many people in their early 50s choose the 20-year term for the main income replacement need, and sometimes add a smaller 10-year layer to cover a mortgage or child care years. Now age 40 quotes in 2026. Same assumptions, non-smoker, average healthy bill for $500,000 of coverage. 10-year term. Preferred Plus about 24 to 34 per month. Preferred about 30 to 44 per month. Standard about 42 to 66 per month. 20-year term. Preferred Plus about 42 to 62 per month. Preferred about 52 to 78 per month. Standard about 74 to 118 per month. 30-year term. Preferred Plus about 78 to 118 per month. Preferred about 98 to 152 per month. Standard about 148 to 238 per month. For age 40 with 250,000 of coverage. 10-year term. Preferred Plus about 14 to 20 per month. Preferred about 17 to 26 per month. Standard about 24 to 38 per month. 20-year term. Preferred Plus about 24 to 35 per month. Preferred about 30 to 46 per month. Standard about 44 to 70 per month. 30-year term. Preferred Plus about 46 to 70 per month. Preferred about 58 to 90 per month. Standard about 88 to 142 per month. For age 40 with 1 million of coverage. 10-year term. Preferred Plus about 46 to 66 per month. Preferred about 58 to 86 per month. Standard about 82 to 130 per month. 20-year term. Preferred Plus about 82 to 122 per month. Preferred about 102 to 156 per month. Standard about 148 to 236 per month. 30-year term. Preferred Plus about 152 to 236 per month. Preferred about 192 to 304 per month. Standard about 296 to 476 per month. At age 40, underwriting details matter a lot more. Mild cholesterol issues, blood pressure that is controlled with medication, or a higher body mass index can push you out of preferred classes. The same policy can move from 55 per month to 85 per month just because the class changed. That is why shopping across multiple carriers is more valuable at age 40 than at age 30. Different insurers treat the same risk differently. Now age 50 quotes in 2026. For $500,000 of coverage. 10-year term. Preferred Plus about 52 to 78 per month. Preferred about 66 to 102 per month. Standard about 98 to 158 per month.